Good afternoon and welcome to Options Center. We are here at 8/19/23. Welcome everybody. We're going to go through a little bit of different format today, a little bit more education, and I want to show you how I set up for the weekend, on the weekend for the next week. So it's very important to prep your week so you can realize if the market does this, then I think it's going to end up here. There's always a question in the market. It's unpredictable. It's chaotic, but you need to react. If the market does this, then you need to get out of your trades, or you need to get into your trade. If the market does that, you do something else. So that's why we prep for the week. This is going to be fairly quick. We shouldn't hold you up for much more than about 25 minutes or so. So checking out, and you know what, if you go down to the description, you have a couple different things that I offer, and any generosity is appreciated. So we have SPX. I usually start off with SPX because it is the most influential portion of the market. You have most of the order flow that goes through here, and it really affects just about everything in the market, whether it's ETFs or individual stocks, even products such as perhaps gold or gold miners, things like that. So SPX is a very, very large influence on the entire market. So we use SPX initially, and then I'll go down to SPY and QQQ because they have certainly influence as well. And ES, the futures market, has tons of order flow too. So I do keep track of all that. We're not going to go through that today. So if you look at SPX, this is called the options expected move. I draw these in every single week. Going back to, I think I started this in 2018, and you can see if I go to a higher time frame, the daily, you can see I go back really far. So what I do, why I use the options expected move, I do have a video on this. I'll link it up above, but just a recap on options expected move is that it kind of gives me a feel of what the market is doing, and also like a playing field for the market. If you're playing a football game, you're within sidelines, and you know whether you're staying within those sidelines or not. And these are our sidelines in the orange, and the white is where we start the week off. So if we're really bursting out of these sidelines, and then we know that the market is chaotic and it's really driving. It's on sort of a path of trending. And if we know that it's just kind of wiggling back and forth within it, not breaching those sidelines, as I call them, then we know that the market is sideways or consolidating. Okay. You see in this trend here, you see that the options expected moves start to widen. It's the options market. Again, this is all in a video, but the options market kind of depicts what they think the market is going to do. And that's not just for SPX, that's for individual stocks and for ETFs as well. Options market is pretty good at showing that price action is going to be within these guidelines here. Okay, when it starts breaking out from there, then you know the market's moving. It's moving more than expected, and then we're on a trend. And then you see the options expected move moving sideways. Okay, that's a consolidation. So you know that it's sideways here. That was sideways for quite some time, a few weeks actually. And again, start to expand, contract. Right now we're expanding. We're expanding to the downside. You saw last week we broke down from the options expected move. So you know that we're headed to the downside. We're expanding to the downside. And again, the options expected move for this week is 79.65. Well, how did I get 79.65? We start off the week here. I already drew these lines in for this coming up week. So we have this white line. That's where we start at 43.69.71. And then we have the market is depicting, the options market is depicting that the market will move 79.65 cents either to the upside or to the downside. All right. So I drew that in, and now we have our one deviation move for the market. Can it break down from that again further? Sure. And that'll show the strength of the downside of the market or the strength of the upsides of the market if we start breaking those deviation moves. So you have your standard deviations. So about 70% of the time you should be within these guidelines. All right, how do I get that number? You go to the trade tab. This is going to be different on different platforms, but with the with Thinkorswim, you go over to the trade tab and you go out 7 days from yesterday. We're Saturday right now, and we're looking back at Friday. Now, you can see what the options expected move is today. If you want to be more accurate, you can go over to the Analyze tab, put in SPX there, and go a day back. So this is called Think Back. And so you go back to the 18th, and you go to the same tab. It looks the same, and 79.65. So we already put that 79.65 just to be a little bit more accurate, because it does change a little bit. It would be 60 cents. So you have a penny off there. So I put that number in there for the plus or minus 79.65. And then this is today's action. And then I just do a little math on the calculator. So you have your options expected move 43.69.71 plus 79.65 will give us the upper end of the options expected move. And then if you subtract 79.65 from 43.69, you get the 42.90, and that gives you the bottom end. And all I do is just draw it. It's just a line. It's just a line on here. Type in your numbers, put in your date, and voila. So that's the upper end, lower end, and the opening or the closing price, excuse me. All right, so what I do is I set myself up with a setup and a workspace, and I save this workspace as a weekend update. I go to here, and it has my scratch pad for things that I think about for the week to come and the big picture. Okay, so not only do I prepare for the week and where the market should stay within in the guidelines, but we also have what I think overall we are doing. And I said, we're in a bear market. Constantly I'm saying, we're in a bear market. Well, the market moved up, so far, hundreds and hundreds of points. And people are talking about new bull market and continuation, things like that. I continue with the bear market because I think that in the overall picture that we are in some sort of wave 4. Now there's different degrees of wave 4, and meaning that if I go to the daily time frame, some people said this was the end of it. This one move that happened from the end of 2021 to 2022, almost a year of downside, and we had in my opinion, a retracement, and we head lower. But we're making some sort of pattern, and that's what we're trying to figure out. So the wave 4 could simply be an A, B, C, some sort of flat, right? A 3, if you look up a flat, it's a 3-wave move, 3-wave move, and then a 5-wave move. So this move should be impulsive if that's the case. We're keeping in mind that if it's just a lower degree wave 4, that this could be a triangle sideways, and that we're not going to hit new lows. Or it could be so we have a flat, a triangle. It could be it technically could be a zigzag, but I think that the wave 2 of lesser degree would be the typical zigzag. So we look for more things that are sideways. It could be a rectangle, but that would be a sideways move. Now, if we start heading lower and breaking new lows, there's still another option on the board. And so I keep that in mind, that the big bear perspective is going to be a 5-wave move. So if this is a wave 1 and this is a wave 2, instead of an A to B, you'll see a 5-wave move. to the downside anyway. Okay, so both scenarios will play out. The catch is will we have a 4 and a 5 all the way down? Instead of ending at the C, that would be a 3, 4, 5, rather than an ABC, and then we start a new bull market. All right, so that will kind of determine whether or not, but that's a long ways ahead. That's months to years ahead. Okay, so we don't have to think about that now, but I also have to have a bull scenario in my mind. So I remind myself every single week, how can we make this into a bull market? How can we make this? And this is, if I put this, I have my daily Elliott wave into a bull perspective. I know it's jumbled, a lot of things going on here, but if I look at a bull, I might even have the alternate still on here. We have an alt scenario, and it's not updated, but what we would look for is this being the wave 2. We talked about it in old videos. You can check out these old bull perspective. It's a big bull picture. I'll link that above as well. You have wave 2, and then we're just now starting on wave 3 and an ending diagonal. And that's what I have right here. So what's very, very important, if this is an ending diagonal, I'll tell you, because I think this move is over. You have an A, B, C, and then a possible 5-wave move to the upside. So we're looking at this being either a wave 4 or this move being over. But the most important part of this bull scenario is this move that we have so far. Even if we go higher, we're just going to adjust this. The most important part is this retracement down here. If we end up going higher, I'll just lift this higher to it. But this should not surpass this 50-60% retracement at this point. That would be really awkward. That wouldn't fit the scenario. We're looking for this as being a wave 1, a wave 2, and so this wave 3 should keep trending to the upside. As a matter of fact, I don't think it should have came down this far at all. Very similar to this one. It just kept going and going. It retraced back to 50%. One time it almost made that 100 simple moving average. Maybe this is that one time. So we're checking things out. It should keep trending. We should not surpass down here the 50%. This would invalidate everything, in my opinion. So that's something I have to keep reminding myself every single week. All right. So getting into some of the options expected move, let's go down to the 65-minute chart and see why it's so important. If you put this on SPY, because most of us trace SPY, not the SPX. So we want to see, you can look at the full update that I did yesterday on the higher time frames and going down to the 65. But what we're looking at right now is that this move is, I don't think it's over. Okay, I think we at least have one more move down or possibly 2. All right, not in a straight line. We down 1, up and down for 2 moves. Or if we get our down move early in the week next week, I think we have a possibility of this first initial motive wave being complete. And so preparing for the week, you just get you make your support resistance lines. You make sure those are nice and set for you. And there's a video on that. I'll have to link that as well for support and resistance. And if you look back, just say, look back on the higher time frame, and you can see all the touches on this one where it matters. Touch, touch, touch here, support, resistance. There's former high, that's a big one. So resistance now made support again, and it should act as support one more time. Okay, so go up to your higher time frame, check those touches out, and remember, these are zones. These aren't exactly exact numbers. The price bounces through them and up, or right at them and up, or right before and up. So this is still part of that zone here, even though I made a little we're on a lower time frame, so I want to make sure that this consolidation area was, these zones were mapped out. Okay, so now we layer we're talking about the options expected move. I have these. It's very hard to see, but I have these on SPY and QQQ. I have them on all the major ETFs and stocks as well. I do that. It's the same thing. You go to your trade tab, and on SPY, this trade tab will be plus or minus 8 points. So I'm not going to do it. I already did it on here. You have your opening price, actually your closing price, but I call it opening because that's where, anyway. So your closing price, and we have the options expected move to the downside, 8 points, or to the upside. And now that we layered there, we can see that it kind of fits perfectly with the mapped out consolidation area that we have here. Now that we broke down from this point, this was the most important breakdown of the last couple of weeks right here. We thought we were going to get more of a retracement and test these gap down here. We did in a sense, but price action continued to move down. It's easier to see on the daily time frame with the 8 EMA, the 8 exponential moving average. That's our trending indicator. Never was able to get it back above it. So we started to break down. And once we broke down from this major trend line here for this move, then price accelerated to the downside. So that was kind of our tell. We had this channel for this whole entire move, broke down, and now we're seeing what's happening. Price is likely to touch or stay within these options expected moves. So either we're going to break to the upside, this move is over, and maybe we test up here and then head lower. That would be a back test of this trend line. And we have these downtrend lines that we're watching out for to now. Okay. And then we layer these with our Elliott wave patterns. We have this Elliott wave on the 65-minute. And this is what I showed yesterday, that if we count, we have possibly 1, 2, 3, 4, 5 wave move for 1 into a wave 2, 3 wave zigzag here into 2. And now we have to get 5 more waves for a 3. 1, 2, 3, 4, and 5 into this larger wave 3. A retracement for 4, and back down for 5 into lower prices. It can happen, but there's another way that we can count this. We don't want to be naive that we're probably going to start getting divergences right here into that move. So we move this up 1 degree and have that as a 1, 2, a 5 wave move down for 3. That 4 right here, and this 5 is actually the end of this wave 1, this first wave 1, and then we should get a nice retracement to the upside. I don't know how far that retracement will go because this is going to be a very, very fast move to the downside, and that move should make new lows. So the each move should be fast and shallow. So we could get to the 50-60% zone on this pullback, but we have to keep that in mind. Those are the 2 likely scenarios that I'm looking for. Could this bottom be in right now? That's possible. Okay, you can look at this in so many different ways, but that's possible. It doesn't look like we're getting an impulsive move, but if we hold these lows and start going higher, then we already have our temporary bottom in. I don't think that's the case. You would have to consider this a leading diagonal. You'd have to, all these waves should be a wave, 3 waves if this is a leading diagonal. So we'd have to have 3 waves move down for 1, 3 waves up for 2, and then 3 waves for 3, 3 waves for 4. And now this would be 1, 2, 3 waves for 5. And then we actually have all 3 waves in for a leading diagonal, and the 5 is in, and we have our temporary bottom, and we go up to retrace before heading lower. So most important part is don't get caught up on what's happening to the upside. We want to focus on selling the rips to the downside. Okay, super important. So we're about at the 20-minute mark here. So we're gonna move on to. I do have some price. We'll go over those in the future. We do have some price relationships here as well. So we're looking for some sort of reversal by Tuesday or Wednesday in this zone. Okay. And let's go over to QQQ because we did not do that yesterday. QQQ on the 65-minute chart, you see this major trend line here. We just breached that. We gapped down under it yesterday. We're back testing it right now. So that's another reason why I think we at least get this next move down here. Now we do have the options expected move. I know it's hard to see on I like a nice clean looking chart. So we're back testing. I think we go down. We may not even get to that 350 zone, but it's highly likely. Now this goes back again. If I go to a higher time frame, it kind of goes back there. I have to have that drawn in, but QQQ is much more volatile, so it's likely to press through, get down to this area. And why is this so important? Yes, it's the options expected move, and then probably at that point start heading to the upside. But here's why. It just so happens that's the options expected move from the options market. If you compare it to the Elliott wave page, this is our former 618 retracement from all-time highs. That's going to act as a support zone once resistance. Also, with our 382 from the bottom of this move. So the bulls are going to say, well, we're getting into this 382 retracement, this support zone, and we're going higher. So you're going to see bulls come in right at this spot here. So that's why this is so important. That's why I think we're getting to this zone. It's going to fake the bulls and the bears out. It's going to leave the question open on whether we're going back higher or if we're going lower. Okay, so this move here we have as 1, 2, 3, 4, and this last move has to have 5 waves and not has to, but if we're accurate, it's more likely that it'll have 5 waves into it if this is a regular motive wave 1. Okay, so after wave 4, we have 1, 2. It could have ended right here, but we thought it did. That was the important part. As soon as we broke down from this, that's when we knew that this was another wave 1, 2, impulse 3, get a wave 4 here, and a wave 5 down. I don't have my 4. Oh, sorry. My lower degree 1, 2, 3, 4, 5 into that zone that we have there. Okay, super important. We also have time relationships there as well. And that would be our wave 1, and we'd look for an ABC into a wave 2. Okay, could this move be over? I described it earlier. This would have to be a 3-wave move, 3-wave, 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 and this could be a leading diagonal. So if we're really strong into Monday and Tuesday, we'd have to be really careful that we're already starting our retracement to the upside and then start heading lower. But that wouldn't, I mean, that would fool the bulls out and the bears. I'm sure it will, but we didn't hit anything really important yet. So it's just likely that we hit. There's so many things happening here. Options expected move, 382 retracement, 62 retracement, that this is our zone that we really have to watch to see if we get a bounce much higher or just a bounce and lower, and then we go higher again. Okay, 2 likely scenarios. All right, I think that's it. That's what we're going to teach you today. Just a recap, for each and every week, I open up my weekend update. There's so much more that I do. Yes, we have something else I want to show you, and these are some things that I look at. What's coming up for the week? So you can us.econoday.com. I check that out, see what's happening for the week. The red stars are very important. Fear and greed. We're getting to that neutral zone. We're getting into this neutral zone. So we were extreme greed. Now what we're looking for is some fear to come into the market. And then we'll probably get a bounce after this fear starts happening. But when we start getting into the deeper moves, we'll get into extreme fear, much lower, I'm sure, very extreme. And then we'll get probably like our wave 4 bounce and things like that, much lower, making new lows and things like that. Okay. So sentiment getting a little bit more bearish. You see it moving up from 21%. This comes out each and every week. So on the 16th, we're getting more bearish, you can see. And the CME, we can see for the upcoming September that looks like we're going to keep rates the same. As economic data comes out, we can, we have 11% chance that we raise rates again, that the Fed does. And you can see these move up and down as more economic data from this calendar starts to come in. You can see those move. So that's a good thing, good indicator on what the market is thinking is happening. So if we get surprises that makes rate hikes more likely, then you'll see this move up. You'll probably see the market moving down even more because of it's not expecting those things to happen. All right, that's it today, you guys. Thanks for joining us here. I hope this all helps. Again, check out the description down low, and anything helps. And we will talk to you tomorrow. Have a wonderful day.